Hi, everyone. We're in luck this week. This number 7 is not very difficult. So it's just what we've been doing for a while is closing out the temporary accounts, this revenue, expenses, and dividends. And that's all that we have presented to us, so we don't even have to weed anything out. So looking at the worksheet, the first entry is to close out the credit balances. The second is to close out the debit balances. Third is close the income summary account, and the fourth is to close the dividends account. So the only revenue account we have, the only credit balance is the revenue of sales. And the revenue and expenses we close to the income summary. The income summary gets closed out to the retained earnings, and the dividend gets closed out to the retained earnings. So that's all we're going to do. We're going to take the single revenue account, the only credit account, and we will close it out to the income summary. Now it's normally a credit balance. We change it to a debit balance, and the income summary takes the credit balance. Next is the debit balances, except dividends is a separate closing. So the debit balances are all the expenses. We have the new expense accounts of sales, returns and allowances, sales discounts, cost of goods sold. And then the salaries expense, they just put sales in front of it. Selling expenses, they just put selling in front of it. And administrative expenses are a separate account for a manufacturing business. But it's also, again, just expenses. So we'll take these with the normal debit balance, we'll put them in credit, and then the debit will be income summary. You just total them up, and you only need one income summary for the total. So both of those just transferred the amounts listed onto your worksheet. The third part is closing the income summary. The income summary took the revenue and the expenses subtracted. For the income summary, we subtract the revenue from the expenses. That gives us our net income. And that gives us the 82,700. And so that's what that looks like. The last one is dividends. They give us that number, it's 39,000. And again, dividends have a normal debit balance. We transfer it to credit, retained earnings is the debit. And you're all closed out. That takes the revenue, the expenses, and the dividends and transfers them to the retained earnings account, which is the permanent account. And our temporary accounts are all zeroed out. When you're finished, your general journal will look like that. So feel free to stop the video at any point and take a harder look. Reach out if you have any questions, and good luck.